We're going to do a quick video here of Metastock analysis Facebook, and we're looking at a one-day chart with three moving averages on it. We've got the green is 5-day, the red is 20-day, and the blue is a 200-day moving average. And again, this is a daily chart of Meta, which used to be called, of course, Facebook. Let's take a look back here and try to see where we started. Back in May, or actually April of 2020, we had a upside break of the 200-day moving average, putting Meta in a firm, this Meta stock in a firm uptrend. And as you can see, we rallied from approximately about 195 all the way up to 300 before we had a sharp break. We then essentially went kind of sideways here from about August to January. Right around the 275 range, we were just continuously sideways until we came down and tested in mid-January, tested this 200-day moving average again, tested it again in late February, and it held. So that started this rally that we see here. It's back and forth on a 5-day, which is normal. It's not really respecting a 20-day, so you can't get a whole lot of information from a 20-day on this. Normally, this 20-day would have been below almost all of these swings, but it's definitely not respecting the 20-day moving average, but it is much closer to the 200-day moving average than you would expect. And the slope of this 200-day moving average is kind of unusual. It's about 30%, which is kind of unusual for a 200-day moving average. But you had a nice broad bull market up to about the 380 range before you got a good break. Now you can begin to see to the downside, Meta is respecting a 20-day moving average. You could have gone short here and never really had to sweat it, and came down, tested the 200-day, and got a bounce from 318 to about 344, which was a good solid bounce. And then it began its standard sideways behavior, oscillating about the 325 range, and also coincidentally oscillating back and forth on this 200-day moving average. Here's where it ran into problems. It had continuous tests both to the upside and the downside of the 200-day moving average, and then you can see it just collapsed. It's kind of hard to see with these moving averages, but this is a gap from approximately 318 down to about 248. That is an enormous gap in any stock, much less a huge company like Meta. So this put us firmly in the bear market territory. Again, below the 200-day moving average, this gap is almost unheard of, and it definitely, you can see, was respecting the 20-day moving average all the way down. Even started to straighten up the 5-day moving average, and trading continuously looked much more less untraditional, let's put it, than it did previously. So we had a definite change in the way this stock was trading from a fundamental perspective and a technical perspective right at this point here in late January, early February. So that brings us to where we are today. As you can see, there's two distinct phases here. We have an oscillation of the price around about the $200 mark until this point here in the beginning of June, and then we drop down and we've had an oscillation of the price right around the 160, let's call it the 169, 68 mark, and that's where we remain. When the moving averages get flat like this, there's essentially nothing they're telling you. The crossovers mean nothing, and you're waiting for a breakout. There's a lot of stocks doing this right now, and this is a classic example of that. You're oscillating around the 170 value, and the market's the participants are trying to figure out whether the stock's going to rally again or not. The target in this scenario is up here around the 225 level, maybe the 220 level right here in the middle of September. That would be an expectation for a rally if we got one. These are all for entertainment purposes only, and they're all my opinions, but right around here in this 220 area around September 15th is what you'd be looking at if you get a rally. The alternative to that would be another break to the downside. I think if you got another break to the downside here, it's probably going to be a lackadaisical break. I don't see that happening based on this chart, but you never can tell. But you definitely, the highest probability I would see right now is a reasonable rally into this 220 range by the middle of September, maybe a little bit later, but not much later, maybe the little third week in September, you could expect to see a rally here. Again, that's just my opinion, but that's what I'm getting looking at this chart. Let's go down and take a look real quick and see what our RBAM research says about it. These are algorithmically generated entry prices. This one's for tomorrow. This has come out early because I'm making this on the 16th, and it's for tomorrow, but we put these out sometimes pretty early. Let's see if we can find Facebook. We still list this as FB on our on our information. Here you can see that this is showing no buy price, which in this trading system indicates it thinks the stock's going to be weak tomorrow. And this algorithm for stocks only put out buy entries, buy onlys, no shorts. With 1 day, 5 day, and a 20-day hold. So for tomorrow, the 17th, these come out every morning. This is indicating that Facebook is not a buy. You can see here Micron Technologies, it's indicating a buy at 63, and the rest of them, Exxon here at 90 bucks and change, and so forth. But for Facebook, they've got nothing going on. That's not really that common. Typically, you'll see buy prices on all these stocks 3 days a week, sometimes 5 days a week. But it's what it's showing us today. It's an indication that it thinks this market for Facebook is weak, and it doesn't have a buy price for it. Let's go down and take a look. We have 190 of these stocks we cover every day. You can get them all for free, absolutely no charge, no credit card required at rbamresearch.com. That's rbamresearch.com. There's a link in the description below. You can sign up with no credit card, get them absolutely free Monday through Friday before 7 a.m. Again, we cover 190 stocks, the major forex pairs, crypto, the most liquid futures, and the way they work is basically you have a 1, 5, or 20-day hold to choose from. If you get in, let's say you got in Tesla at 897, you would hold it for a day and get out. If you don't have a profit at the end of 1 day, you close it at a loss, you take your profit as soon as you get it. Same thing for the 5 and the 20-day holds. If you bought it at 915, you get out worst case at a loss 20 days, or alternatively take a profit as soon as you got it. That's basically the way these algorithms work for stocks. And again, these are for entertainment purposes only. You never use these solely as your own entry source. You have to kind of use them as an entertainment feature, and you take a look at them and you say, hey, how does this compare to my own research? And you don't rely on them for anything other than entertainment. You always trade at your own risk. Again, you can get them all for free with no credit card required at rbamresearch.com. Just click on the link in the description and go sign up. If you like this video, please click the like button. If you want to subscribe, please do that. If you have comments on how we can make these videos better, please leave us a comment below. And keep in mind, everything, including my comments and the entry prices, are all for entertainment purposes only, and you definitely trade at your own risk.